Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 27th, 2025, and we're diving into Lakeland Financial's latest earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Lakeland Financial has just released their third quarter results, and there's a lot to unpack, from net income growth to strategic expansions.
Revenue and profitability overview. Let's start with the top line. Lakeland Financial reported a net income of $26.4 million for the third quarter, which is a 13% increase from last year. Revenue also saw a 13% rise to $69 million. John, what are the key drivers behind this growth?
The growth in net income and revenue is primarily driven by a 14% increase in net interest income, which reached $56.1 million. This was supported by an improved net interest margin and consistent loan growth. The company's strategic focus on expanding its commercial banking and wealth advisory services has also contributed significantly.
EPS performance and analyst expectations. Now turning to earnings per share, Lakeland Financial reported an EPS of $1.03, slightly above the forecast of $1.02 from two analysts. How does this performance align with market expectations?
The EPS of $1.03 not only meets but slightly exceeds the forecast, indicating a solid performance. This beat, albeit modest, reflects the company's effective cost management and strategic growth initiatives, which have helped maintain profitability despite a competitive banking environment.
Operational efficiencies and future outlook. Operational efficiencies seem to be a strong point for Lakeland Financial. The net interest margin improved by 34 basis points to 3.5%. What does this mean for the company's future outlook?
The improvement in net interest margin is a positive indicator of Lakeland's ability to manage its funding costs effectively. With average loans growing by $141.5 million, or 3%, and the opening of their ninth office in Indianapolis, the company is well positioned for continued growth. These strategic expansions are expected to drive further revenue and profitability.
Asset quality and risk management. Asset quality is crucial for any financial institution. Lakeland Financial reported a significant decline in nonaccrual loans by 68% to $18.7 million. How does this reflect on their risk management practices?
This substantial reduction in nonaccrual loans, along with the improvement in watchlist loans to 3.0%, underscores Lakeland's robust risk management framework. The provision for credit losses was also reduced to $2.0 million, indicating a healthier loan portfolio and effective credit risk assessment.
Capital strength and dividend policy. Capital strength is another area where Lakeland Financial has shown resilience. Their total capital ratio improved to 16.22%, and they announced a 4% increase in dividends. What does this say about their financial health?
The improved capital ratio and the 4% dividend increase to 50 cents per share reflect Lakeland's strong capital position and commitment to returning value to shareholders. The 7% increase in tangible common equity further solidifies their financial foundation, enabling them to support both organic growth and shareholder returns.
Key takeaways. In summary, Lakeland Financial has delivered a strong third quarter with impressive growth in net income and a slight beat on EPS expectations. Their strategic expansions and robust risk management practices position them well for future growth. Thank you for joining us, John.
Thank you for having me. Lakeland Financial's performance this quarter is indeed commendable, and it will be interesting to see how they continue to leverage their strengths in the coming quarters.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Lakeland Financial's performance in the comments below.